Hello, good morning. Welcome in CA Etology. My name is CA Chaman Lal. I am going to start new income tax series in which we discuss basic provision of income tax. Before start to income tax provision, I give disclaimer that here I discuss only basic income tax provision for a common man to understand the income tax. It is not a professional advice or any advice for a legal purpose. Thanks. Let's start income tax. As a name, income tax means tax on income. As a definition, that income tax means tax charged by government of India on the income of every person. And the provision how to charge the income tax are detailed cover under the Income Tax Act. It is also called direct tax. Direct tax mean the tax are directly collected from the person who earned the income. There is another tax. It is called indirect tax. For example, sale tax, VAT, service tax. Now, new become a goods and service tax. This is called a GST. Why it is called indirect tax? Because it is charged indirectly of the person. Understand with example. It's made by manufacturer, sold to distributor, distributor sold to wholesaler, sold to retailer, and retailer to customer. It's called consumer. They are paid to tax to government, but ultimately burden of the all the tax is bear by last consumer. So it is called by indirect tax. In income tax mean tax on income. If no income means no tax. Whose income? First we don't know whose income. Income of a person. And what is mean by person? Is normal definition. Person means a human being. But as per Income Tax Act, person definition is much more than common definition. Let's see what is a person. Person being individual. Person also include HUF, Hindu undivided family. Person mean firm. This is called partnership firm. Person means society, cooperative society. Person means trust. Person mean private company. Person mean public limited company. Person mean association of person. Person mean body of individual. Person mean company public limited. Person mean local authority, artificial judicial person, and person mean government, and much more as per Income Tax Act. So all these are person in the eyes of Income Tax Act. Future where we use person, it means all these are person included in it. If you use human beings, then we must be right individual, not a person. After we knowing the definition of person as per Income Tax Act, now the most important concept is year. Let's start. Income has calculated as per Income Tax Act year wise. First year has start 1st April to each year and close 31st March of each year. There is not a calendar year January to December. As per Income Tax Act, we see 2 year, but his name is one is the previous year and second name is called assessment year. And now what is now discuss what is mean by previous year and what is mean by assessment year. We know that the income is calculated year wise, so until unless the year is not closed we cannot be calculate exact income. For example, 1st April 2021 to 31st March 2022 की income we cannot calculate in between. We only calculate after the 31st March 2022. And after 31st 2022, the next year has been started, in which we have paid the tax and filed the return. This year is called to assessment year, and which income we have declared, that is called a previous year assessment year. Okay. Let's see income tax return acknowledgement slip. Here it is a mention assessment year 2022 and 23. It is clear that always in the income tax returns acknowledgement slip is mentioned assessment year, not a previous year. Most of the people confuse that it is a return of 2022 and 23, but actually it is a return of previous year 2021 and 22, means 1st April 2021 to 31st March 2022. Next most important is status of a person. Income and tax determined according to the status of a person. Income Tax Act, there are three type of status of a person. One is resident, second is non-resident, which say NRI. Third is not ordinary resident, NOR. Status of a person has a full-fledged chapter. All the provisions are discussed later on in the chapter. Now here I give one example that how a status has affect income of a person. Let's see the example. In this example, we have two persons, Anil, resident of India, and Balvinder, non-resident of India. Anil, who is a resident of India, has pension income 350,000, year interest 125,000, interest 75,000. His son is settled in UK and he has purchased a house in UK. Get rent of 3 lakh per annum from UK. Now, what is his total income? First, we compute the total income. Whether it is taxable or not taxable is another part of the work. Now, his total income is 550,000 and add 3 lakhs for the income which earned in UK. The total income होगा 850,000. This is an important concept. If a person is resident of India, is all income all over the world must be computed, whether it is taxable or not taxable, whether there is any relief is given, whether there is any exemption is given, is a second part. First we must be including in the total income. Now second part is Balvinder Singh, who is non-resident of India, NRI. He settled in UK and here is rental income approximately 5 lakh per annum. Balvinder Singh also has deposit in India and income on that. So his house, yeah, he earned rental income of 2 lakhs. Interest on FDR on 350. He has earned from India 550 in 2021 and 2022. What is total income for Balvinder Singh for the taxability in India? Say only income earned in India, that is 350 and 2 lakh, total 550. Have not include the rental income earned in UK because he is a NRI. Here we find the major difference between two, Anil and Balvinder. His residence and another is non-residence. Person become resident, his all income is included in the total income of it. Whether taxable or not, that is another part. If a person is NRI, only those income are included in the total income who earn in India. Here again, whether it is taxable or not, this is another part. If Balvinder Singh is become an same, if Balvinder Singh is also resident, then his total income included in 5 lakh. If Balvinder Singh is also resident, then his total income is include the rental income received in UK 5 lakh, then his total income is 10 lakh 50,000. How to decide the status residence, non-residence, not only resident is discussed in the residence status chapter. Here we discuss the detailed provision of the status. Now we know what is the meaning of person, year, previous year, assessment year, and status, basic knowledge of status. And now we study the income, how many type of income of the person earn during the year. Study this with example. We discuss income with examples. How many type of income? First, A income, interest income only, FDR interest 75,000 per person. Mr. B, rental income, commission of LIC and bank interest only. He has income from shop and bank interest. Mr. D income is profit on sale of house. Sale in 25 lakhs is 22 lakhs is 3 lakhs bank interest. Has income dividend receive, bank interest and salary. All these persons are write their income. Mr. A first write as interest income. Mr. B's first writes house rental income and then commission, then bank interest. He write income from shop and bank interest. He's long-term capital gain, bank interest. He first is dividend income, then bank interest, then salary. All they are write their income there according to their manner. Because of income is different to different person. Person is written interest income first, other person is right business income first. Mr. E writes dividend income first. Incomes of funds is different to different person. For income tax, incomes of income is must be uniform. Let's see what is the sequence of income. Sequence of income. First salary income, then rental income, then business income, capital gain income, other income, and clubbing of income. This is another chapter, clubbing of income, and set of carry forward losses. This is also another chapter, set of income. Then total of all above income is called gross total income. And income tax also given some deduction under chapter 6a. Most common deduction is life insurance premium, NSC purchase, tuition fees paid of the children, medical insurance premium paid is allowed to deduction from gross total income. And balance is total income on which is tax calculate. Income must be reported sequence wise. If you have salary income, then write down salary. If you have no salary income, then write nil. If you have house property income, write on house property column. If you have no house property income, write nil. Business income, if you have business income, write down, otherwise nil. Capital gain, same, if you have capital gain income, then write on it, otherwise it's nil. As other sources, this is a example of return file under Income Tax Act. This example, person have no salary income, left blank, and person has house property income, write on. He has also business income and also other sources income. He has not capital gain income, so it left blank. Gross total income less deductions, this is net total income which tax has computed. Now we know the person, year, status and sequence of income. Salary income known as income under the head salary. Rental income zone are income under the head house property. Business income under the head business or profession. Capital gain income, capital gain under the head of capital gain. Other sources income under the head of other sources. Clubbing of income and set of losses. All these are separate chapter under the Income Tax Act. Deduction under chapter 6A is also a separate chapter. We are discuss these chapters sequence wise. First status, then income under the head salary, then income under the head house property, then income under the head business profession, then income under the head capital gain, then income under the head other sources, and clubbing of income as set of. These are separate chapters and discuss each of them. After finding the total income, now is tax on it. Tax is calculated according to the income tax rate provided by the income tax department year to year. After calculating the tax on income, less TDS or TCS and less advance tax which already paid during the previous year, and also calculate late interest if I deposit the late advance tax or not deposit the advance tax in time, the interest will be payable on that. Calculate the total tax payable. Total tax payable is more than the tax already deposit or TDS, then it is paid by the self assessment tax challan. If it is less than, then refund is due and government has directly transferred to their account refunded amount. TDS, TCS, tax deducted at source, tax collected at source. It is a full-fledged chapter we are discussed in detail. And also advance tax, provisional tax is also full-fledged chapter and we are discussed in detail. Same interest on late deposit, not deposit is also full-fledged chapter and we discuss in detail. Thanks. In this video, we discuss only basics of the income tax which reflect in the computation of income. Now in next video, we discuss detail of each of head. Thanks very much.